Well, good morning, good afternoon, good evening, depending on where you are. We are so excited to have you here today, thrilled for you to join us. Our webinar today is called Why Your KYB is Only as Good as Your KYC. And I'm Colleen Carey, the Head of Product Marketing at TrulyU. Joining me today, we have Thefel Rusalaya Roby from Onbi. She is the VP of Compliance at Onbi. We also have Kiran Kumar, our VP of Product Management here at TrulyU. Today, we're going to talk about the complexity of KYB, or Know Your Business, and KYC, or Know Your Customer, the complexity of the regulations, and how a single integrated identity platform can help you streamline the process of truly knowing and understanding both the entity itself and the people that you're doing business with. So we're, again, thrilled to have you join us. And if you have any questions during the webinar, please go ahead and send them to us via the Ask a Question module on your screen. They'll pop up. We will most likely take questions at the end. We'll try to insert them throughout, but we'll most likely take them at the end and cover as many of those as we can in the Q&A section. We're also going to be live tweeting this webinar, so you can join the conversation today at hashtag Finovate webinar. That's hashtag Finovate webinar. So we will go ahead and get started. Again, thank you for joining us, Kiran and Thefel. We're going to start out by just kind of characterizing the what's happening in the market today. So, you know, in 2022, global fines for anti-money laundering and other financial crimes surged more than 50%. So year over year, 2022, fines surged more than 50%. And what you see here is kind of how it's broken out by region where those fines are most active. But I think one of the most compelling numbers is that since the financial recession of 2008, total fines for anti-money laundering and breaching sanctions and KYC failings total over $55 billion, right? So what this is telling us is that perhaps all of the regulation that was put into place in 2008 as a result of the financial crisis may not actually be curbing this type of behavior and this type of financial crime across the globe. So certainly something that's concerning to all of us. And I think before we get started, I'd like to get a sense for you know, the folks in the audience here. Can you talk to us about how many of you are doing Know Your Business KYC or KYB verifications and Know Your Customer KYC verifications? And we're going to do a little poll here. So if you can go ahead and answer that question, we will be able to see the results on the screen. How many of you are doing KYB and KYC verifications today? A is KYC only, B is KYB only, C is KYB and KYC, and D is not so sure. Okay, I'm getting some poll results in. Okay, wow, so 61% of the folks in the audience today are doing both KYB and KYC. That's actually great to know, great to hear. About 22% doing KYC only. And that helps us kind of gauge, you know, what we're going to cover in the presentation today. But just for the purpose of, you know, kind of making sure we're all on the same page, let's talk a little bit about what KYB, Know Your Business, or business verification is. Sort of originally in the old days, it was about, you know, are we meeting global regulatory requirements? It was really the stuff of the legal and compliance departments. And I think sort of above the iceberg, what we know is this is a problem that is very painful, right? KYB, Know Your Business, can be very manual. It requires, you know, the work of human intervention, human analysts, looking at data, looking at outdated data, disparate systems, and trying to piece together an understanding of that entity. So a lot of the focus has been around process evolution, moving from very manual processes to more automated processes. But under the surface, there's so much more. There's not just identifying, but verifying the business entity, the type of business, and whether they're suitable to do business with, verifying beneficial owners, those that have a significant stake in the business and can influence the success of the business, doing AML watch list screenings for individuals and businesses. And in the end, what are we trying to do? We're trying to, minimize fraud and risk. We're trying to still provide a very engaged, compelling user experience that drives growth. And that balance is very, very tricky. Business verification is a complex problem. So just to be sure that we've got our terminologies similar, beneficial owners can be referred to many ways. They may be referred to as UBOs, ultimate beneficial owners, persons of significant control. And these are individuals who indirectly or directly have, number one, substantial control over the reporting company. Number two, ownership interest. So they may own or control at least 25% of the interest of the reporting company. And these can be individuals or businesses, and that makes things vastly more complex, right? Are the folks that have the most to gain from the sort of outcomes or results of a business, are they an individual, are they businesses? And that can result in very, very different verification processes. So today we're going to talk about your KYB is only as good as your KYC. The idea that KYB is a multi-stage process. Sometimes it's 2 steps, sometimes it's 3 steps. It can be many, many more. But the idea that first you may need to consider identifying and verifying the individual who submits the reporting company and whether that person is legitimate. Secondly, you may then have to identify and then verify the business entity itself. Is this business legitimate, and is it suitable to do business with? And then that third step is connecting KYC back to KYB, which is looking at those beneficial owners, those folks with significant control, and verifying again that they are who they say they are, and potentially that they are legitimate and suitable to do business with. So this can go into further watch list screens and checks and so on. So it's a complicated manual process, considerably less automated than KYC today, and can cause, businesses a lot of incremental cost, incremental time, with business verifications taking days to weeks to months. And this is something today we want to talk about. How do we streamline this process to create a better experience for our clients while protecting our business from fraud? So I'm going to go ahead and open up the discussion here and introduce again to you Thefel, the VP of Compliance from Onbi, and Kiran, our Product Management VP here at Trulioo. And Thefel, as the head of compliance, if you would please first tell us a little bit about your business.
Yeah, sure. Can you hear me?
Yes.
Awesome. Well, thank you so much for having me today, Colleen. So Onbi is a fintech, and we work in the financial services space, ultimately to move money. We take on the complexity and risk of orchestrating payments from businesses to individuals to deliver, ideally, a very, very simple solution for our exclusive corporate client base. So thousands of corporate clients later and over 100 billions in payments later, we continue to serve companies ranging from the mid-market to the Fortune 500. So that's a little bit about Onbi.
I appreciate that. Thank you. And tell me what you heard earlier about the sort of cumbersome, costly manual process of business verification. Did any of that resonate with you?
Yes, absolutely. We have been on a KYB/KYC journey since I've been at Onbi. So the key question for me, really, having KYB sort of be the encompassing vehicle by which KYC often is done for our corporate clients, is how do we make that process simpler and faster while calibrating for risk and achieving compliance, right? So that's the big question and challenge in front of us. As I mentioned, Onbi works exclusively with a corporate client base, so all of our clients are institutional. They're primarily resident in the US, in Canada, and Europe, and we do lots of KYB of these corporate entities. We also do lots of KYC of the people who own and control these entities. And in some jurisdictions, we also do KYC of the ultimate payment recipient, so the person who actually gets the money on the other end of the transaction. And really, over the last year, we've been on a journey at Onbi to simplify and streamline our KYB onboarding process, keeping very focused on managing risk and compliance. And our very, very high level approach here, we examined our onboarding process end to end and realized that KYB is honestly just one component of our overall lead to launch lifecycle. So we designed an approach to improve the orchestration of the business process flow start to end. So for example, let's say a new lead is identified. Our client-facing teams work to find the right payment solution to fit that client's need. We price the deal, and before launch, we perform the KYB review, and that KYB due diligence review, which is performed directly within our client relationship management system. We have found that a really simple KYB due diligence review can take a couple days, while a complex one, as you mentioned, can take over a month and multiple months to get fully reviewed. And when I think about what does that mean, fully reviewed, fully approved, it's all of those aspects, right? So verifying the corporate, so collecting the data, verifying the corporate, collecting the individual who owns or controls them, verifying that data, verifying suitability, as you mentioned before, performing risk scoring, any enhanced due diligence if they score as high risk, and any subsequent bank approvals. So the timeline really does depend on the success of each of those steps in the due diligence process.
Yeah, that's excellent. And you talked about a complicated versus a simple onboard. Can you just talk about what characterizes a complicated onboard?
Yeah, absolutely. So Onbi has a comprehensive suite of payment modalities, as we call them, and they're not always facilitated by a single bank. So as a fintech, we facilitate the payments through partner banks across the world, but we're not a bank, so we don't custody client funds directly. Each bank that we work with, each of our partners, has different standards based on their own risk appetite. So we need to calibrate our due diligence accordingly to their standards. And our partner banks are also not subject to the same regulatory regime. So there are differences in requirements just based on the laws or regulations of that particular jurisdiction. So the complexity really comes from not having a single set of requirements. Instead, we have to be able to sort of pivot up and down, bank to bank, jurisdiction to jurisdiction.
Thank you. And you mentioned, so Thefel talked about a simple onboard can take a day or up to 10 days. A complicated onboard can take a month or longer. I'd like to ask the audience, we're going to put another poll. For those of you who are doing KYB today, how long does it take you to onboard your businesses today? Let's see if we have similar experiences. Is it possible that that folks are not necessarily doing full KYB, or is it possible that perhaps you're not even sure? I think that's a fair question. I think what we hear from Trulioo customers, if I can just sort of turn it to you, Kiran, talk a little bit about what Thefel is mentioning with days to weeks to months. Is that common with the customers that you speak with?
Yeah. Colleen, thanks for having me here, and definitely not surprised with any of the options that you laid out there, right? KYB is a complicated process, as you laid out, and the timelines are subjective, right? And it will really depend on each organization's regulatory compliance requirements, their trust and safety, principles that they have instituted, as well as risk profiling measures. But the important thing here, right, to remember is KYB process, because it is so multi-stage, multi-pronged, and dynamic, right, it requires that right amount of due diligence based on the data that, identity data that gathered on that business. So to me, right, what it comes down to is it involves weighing the benefits and costs of gathering and analyzing the information that you've collected to make an informed decision. Is this the good business, right, that will be that we need to onboard onto our platform? So using a quote from one of the popular movies from 2000s, is the juice worth the squeeze, right? That's what it comes down to. weighing that benefits, basically.
Yes, thank you. And also, Karan, I'm going to keep questions with you. Can you talk a little bit about, Thelfel's mentioning regulations. There are different regulations from the individual banks. Of course, there are different regulatory regimes and global regulations. What are some of the things that folks in our audience might be thinking about today or need to think about?
Yeah, I mean, look, I think, regulations around business and individual onboarding is constantly changing, right, and evolving. But the underlying themes around most of these regulatory requirements are, some of the things that Thefel talked about, right? Robust AML measures, right? So this is massive, and the numbers that you've laid out as well, right, is to money laundering, terrorist financing, and other illicit activities, right? Doing that sanction screening and having a robust AML practice is absolutely critical. And then UBO disclosures, right? So UBOs are constantly changing, right? And the business ownership, and I'll share some stats later on, right? It is super dynamic, right? And so being able to have that full visibility into who is the owner, right? Could it be an entity or could it be an individual, right? And constantly doing that regulatory reporting on that business. So that's why, as part of the gathering of the information, right, capturing some of the articles of incorporation, shareholder information, all of that is super important. And then most importantly, right, the data handling, data privacy and risk assessment around these regulations, right, that require how businesses handle the data, right? So that is absolutely critical. And there's a full process, GDPR being one, and then CCPA here in California. So data privacy and risk assessment is top of the mind for sure.
Absolutely. So I think that's a nice segue to you, Thefel. Again, you're the head of compliance. You've got all these regulations you've talked about from banks and different global regulations. So can you talk to us a little bit about your business onboarding process and the steps that you're going through today?
Yeah, absolutely. So at the very high level, I would characterize our onboarding as sort of a 3-step process. The first step is the data collection, so the KYB data collection. So we do that through a web form today. So we gather the data on the corporate client, the individual that controls or owns that client, the payment modalities a corporate is interested in. So again, based back to your suitability fit comments earlier. So once that is collected and the form is submitted, it lands into what I call step 2, which is our case management tool. And it is an internally built case management system. And this really records my team in compliance's work. So our review, our due diligence review. This is also connected to our overall CRM. So our client-facing teams are using the same tool as we are in compliance, which is actually an added benefit so that we're all on the same page, lead to launch. And then step 3 is a verification stage. So this is, again, where my team is getting in there and actually looking at the feedback that was given through the form, the data collection form. We're verifying the entity. We're verifying the people who control it. We're performing that risk scoring. We're triggering any enhanced due diligence for high-risk clients. We're doing our sanctions, our PEP, and our adverse media screening. And we're also looking to make sure that that payment modality that the client is asking for is permitted based on use case, and if there's a fit between what the client wants to do, their business model, and the payment that they're seeking.
Okay, that's great. And thinking about all the various data types you just talked about, right? You talked about PEPs and sanctions and articles of incorporation, all these various sources of data. We're going to go back to another poll, and this time I think I pulled the trigger a little too early last time, so let's see if I can get it right this time. This poll, I'd like to ask the audience, as part of that sort of phase 1, that data collection, how many data points do you collect today? How many different data sources are you accessing to get this sort of more holistic view of your risk? So is it A, 1 to 5? Is it B, 5 to 10? C, 10 to 20? or D, 20 plus. So if you go ahead and just submit your response on the screen, then we can see how we did. I was giving number. Again, the question is, how many data sources do you collect today to get your sort of most holistic view of your risk? So I'll give you another second or two to think about it. Okay, why don't we go ahead and take a look at the results and see what we have here. Okay, so about 44% of people use 1 to 5 data sources, 25% use 5 to 10, 18% use 10 to 20, and 20 plus is about 12.5%. And again, I'll toss this back to Karan. How do those numbers compare to what you see with your Trulioo customers in general?
Yeah, Colleen, this is the biggest, takeaway that we gather when when we talk to our customers, and this is one of the biggest challenges, right? They're pulling from so many different data sources. How do we make sense out of it, right? Because ultimately, it comes down to what does standardization look like, right? So, in terms of let's to give a realistic example, right? So based on the data that you're gathering, such as the name, registration number, address, jurisdiction of incorporation, these are essential elements, to identify that business, right? So to provide an example around unstructured data that's gathered, right? Only US has 150 different format types for the business registration number, right? So how do I make sense out of it? Is this legit? Is this not? So that's why, right? There needs to be a standardization or an intelligence layer that can piece together information that is collected from various different sources and being able to, provide that in a comprehensive and understandable manner, right? So that you can make that decision, right? So you can make that informed decision. So taking that unstructured data and being able to make the sense out of it is absolutely a critical step as part of that, due diligence that we need. So it starts from the top.
Yeah, absolutely. And I think what Kiran is talking about, the recent criminal report, which was published in May, they're called the risk of integrated identity platforms, show that the average number of point solutions that businesses are using to verify identity across a journey is 8 to 12. I think we've seen customers that have used, and you saw a few here, 20, 25, 30 or more, depending on, the regulation. I mean, financial services customers, obviously, the more complex your customers, moving from, LLCs kind of up the chain to S corps, it gets more and more complex. There are more and more data sources you have to go after. So it's a very complex process. And I'll go back to Thefel. So you talked about you've got all these various data sources, all this information you're trying to pull into an end-to-end view. How did you go about building your process?
Yeah, it's a great question. It was tough, and we are still on the journey, for sure. We took a step back and really analyzed the business process, right? Leaving technology aside for a moment, really just taking a look at the KYB onboarding process start to end. Again, layered on with those really two principal objectives. Truly what KYB is all about is knowing that customer, knowing that business. We want to know the client. That's ultimately the point of the KYB process, so that the risks presented by the client are well understood and we're not taking on a client that exceeds our risk appetite, right? That's the fundamental point of KYB. So that was a principal objective going into our process build. And second, we wanted to make the KYB process as simple and friction-free as possible. I mean, it is still compliance. We're never going to get rid of complexity and friction in this process, but we are really striving to make it as simple and friction-free as possible. So those were sort of our guiding principles going into a process redesign. And again, we're certainly not at end of job, but as we've been on this journey for the last year or so, we've built an improved KYB process, which is enabled by technology. And as I talked about those 3 steps, so data collection, case management, and then sort of automated data verification, we are very close to launching our web-based form out there, a revamped web-based form for data collection. We are now testing aggressively with clients, actually, that web-based form effectively lands into our newly designed and built internal case management system. And step 3, the verification stage, so pulling all of those data attributes together to say, yeah, that person exists and that entity is true, is still manual today. So my analysts are still going to various sites and tools, including Trulio, to pull that verification detail of the entity and the person. Our goal is to automate step 3, that verification step, as much as possible in the coming months. So that's the last leg of our journey that we've been on for the last 12 to 18 months or so.
Okay, and so that, I mean, that total journey you could see taking 2 years or
Absolutely.
longer?
Absolutely. Yeah. So obviously our first foray into this at Onbi, and I've done this a couple different places, and it generally takes a year to 2 years to get it right, for sure.
Yeah, and I really like how you said earlier that you spent the sort of what felt like the majority of the time on the business process itself, right? What are those workflows? What makes sense? How do we, ensure that things get routed properly based on what you're trying to accomplish? So it truly, you're validating the complexity of this process. Now, you at Onbi, you chose to kind of build a homegrown orchestration tool. I'd be curious as to kind of what went into that thinking, and how's that going so far?
Yeah. So we went through a formal build versus buy, assessment, and we did it pretty formally, actually. Onbi is a fintech company. We're proud of what we're able to build in-house with that technical expertise. We're pretty proud of that technical capability that we do have in-house. My product and tech teams have been really hard at work, building this out, because we felt like that capability did exist in-house. Again, we've launched phase 1, we've launched phase 2. We're doing tons and tons of testing right now. But we analyzed quite a bit of different factors as we were assessing whether we were going to build this in-house or seek external help for it. We looked at whether an integration was possible. That's probably one of the key aspects of this. We wanted to make sure that our tool could integrate with Trulio, as an example. So integration to our existing tech stack was really, really important. Monitoring and reporting, extremely important. We felt like a lot of the vendors out there just didn't have, at least off the shelf, anything that we could leverage immediately. And it would still require quite a bit of build on our internally to be able to get the reporting that we needed. We looked quite a bit at effort and complexity from an implementation perspective, right? So how much effort in compliance, how much effort in technology, and how long would this ultimately take? So from a deployment timeline perspective, we looked a lot at vendors that could calibrate based on our risks, right? So we do have a complex product suite, and we do need to be able to risk score against a very sort of unique set of risk attributes. And that was hard to do with vendors off the shelf. And then cost. I mean, that, is always a decision-making factor, but sort of putting all of those into the pot, we came up with, we can do this in-house. Again, we're still on that journey, but we are really excited about what we've built already, that's launched into production. So more to come as we continue that journey.
Absolutely. If I were to go through the sort of 3 phases of your process, for the folks in the audience, maybe you could talk about what were some of the questions you wanted to ask vendors to help you decide if they were the right fit for each of the phases. So the first one was data collection. What were some of the questions that you were interested in solving?
So obviously we wanted something that was protected. So the data that's going into this web-enabled form had to be encrypted. It had to, you had to give a lot of comfort to the clients that were giving that data. We wanted to make sure that all the features could directly land in our case management system. So we didn't want intervention with multiple tools, multiple layers. We wanted a seamless experience. So those were some of the features. We wanted to be able to trigger risk scoring. We wanted to be able to trigger enhanced due diligence. We wanted to be able to have notifications in our case system, right? So we wanted to make assignments really, really clear. So as we were going through that evaluation process, we had a very sort of long list of requirements from a data collection perspective, from a case management perspective, and from a data verification perspective.
Yeah, one of the things you talked about in previous conversations was branding, like branding options. What were you thinking there?
Yeah, so in our unique model, again, we're a fintech. We work with clients that sometimes want their branding, that sometimes don't care if it's Onbi branded. So branding was really important as part of the data collection process to make sure that the end client was getting an experience that was not dissimilar or unusual for them, that they could recognize the Onbi brand or they could recognize a different brand that they were working for or with.
Makes sense. That's great. So I'm actually going to turn it to Karan and ask you the question. So we've listened to the process that Thefel and her team have gone through to sort of build this whole thing from scratch. For those type organizations that, maybe don't have the resources to build in-house, want something that is already integrated. Can you talk a little bit about an integrated identity platform? What is that? And why is that an interesting and compelling way to go?
Yeah. First, if you don't mind, I want to, talk through the KYB process, right? And then kind of hit on some of the attributes of an identity platform that's important when you consider. So Thefel obviously went through a decisioning process with buy versus build. But really, right, first we need to think about, so the approach that we've taken here at Truly You is that KYB is a journey, right? And it's not a destination. So that's why a workflow or orchestration type solution is best suited, because the decisioning for KYB is all done based on data. And I'll give you an example here, right? So for example, if the business status, right, changes, right, based on the data that you're getting, or if the ownership of the entity or that individual is less than the regulatory requirements, right, which is, most commonly around 20%, or if the industry, right? So you want to run through some additional decisioning points, right, or send it to a sanction screening or manual processes, et cetera. So all of that business logic needs to be able to be visualized and make that decisioning. And Thefel made a great point, right? Like, it takes time to build this out, right? Like, 2 years was what was quoted, right? So having a workflow orchestration type, solution, right? You as a product manager or a risk or a compliance person can actually draw this entire workflow, right? And then iterate over it, right? And get that gains, right? Like, what is the right process, right? What is the right amount of efficiency we want to gain, right? So using these workflows will help to build automation, and that can greatly help with manual processes. So KYB, I want to caveat that, right? KYB is never going to be a fully automated process, but there are opportunities where we can automate, right, certain manual processes, and the complexities can be taken out, right? So that's where a workflow type solution can help. So in terms of an identity platform, right, having that workflow capabilities, being able to do both KYC as well as KYB, and as you had put it up earlier on, right, Colleen, the journey really starts from the person that is, inputting that information, right? Is that person legit, right? What is the information that he or she are entering, right? And then the business complexity around the business gathering, right? And verifying that, and then doing a KYC on the UBOs as well. So having a single platform, right, that is able to do both individuals and business, and being able to dynamically build those workflows, right, based on conditioning is super, super important. And just to, just for fun, and if we want to, multiply the complexity based on the number of countries you're operating in, you do the math, right? Every country is different, right? So there's regulatory requirement. There's your own, requirements around risk profiling or trust and safety that you want to bring in. So having someone, that is able to do this on a global basis is very powerful. It's a journey, right? So workflow orchestration type solution is absolutely critical for KYB, is what I would say.
And if folks in the audience are doing both KYB and KYC, how does an integrated identity platform make that easier or faster?
Yeah, I think, first of all, things around like, you're able to build out the workflow, right? Build out and being able to visually look at the business logic, right, that you want to bring in, right? What are the conditions? What are the input forms look like? What does the conditioning logic look like, right? All of that can be stitched together based on, what you're doing today and where you want to get to, right? And then the other aspect of it is the big thing around verification, right? What does verification, tapping into government registries alone is not, is definitely the first starting point, but then there are a lot of other data sets because registries don't always come back with matches, right? We know, especially in certain countries, right, government registries are not kept up to date, right? Being able to get it from, tax ID documents, right? Registered business, SEC filings, et cetera, right? Being able to tap into all of these, verification providers and in a single uniformed way, right? That makes it very easy, essentially, right? So I would say, just being able to do this end to end and having the right set of tools that's available, right, for you to do this, and functionality within the platform, that is critical here.
That's great. So we've talked about there are different ways to get at this. Now that you're on 18 months into this journey, Thefel, tell me, what does the ideal scenario look like for you? How do you know you've done your job?
Ooh, that's a tough question. So let me tackle the first one. So ideal scenario on what a KYB journey would look like. Let's say we're onboarding ABC client owned by John Smith, right? So John Smith fills out, he types in his KYB form all about ABC client. He includes all the corporate client details, his ownership details, the product details that he's requesting. The form gets submitted, he hits submit, it lands in my case management tool, that orchestration tool that Karan was alluding to. All the data about the corporate entity and the owner is there. I can see it. It's beautifully visualized. I have a checklist of sorts in that case management tool to see all the components that I need to verify. Today, that's still on a sheet of paper. It's not yet built fully from a verification perspective. All that verification that I need to go do of the entity, the person, the suitability of the product, the sanction screening, the PEP screening, the adverse media screening, ideally would all just be performed in the background, right? Based on the data that's submitted. And I would have an alert or a no alert. And, there's sort of an approval decisioning that sort of is visualized and displayed for me in that case management tool. At the end of it, a risk score is spit out. So I can see, ABC client is high risk or medium risk, and here's why. And based on that risk score, a periodic review is scheduled. So I know that, we take a 1, 2, and 3 year cycle. So if it's a high risk client, we relook at them again. A year later, a medium risk client would be 2 years later, and a low risk client 3 years later. And then we have a place to approve it. or decline it if we feel like the risk score is too high, or what the client is presenting is outside of our tolerance. And all of that is captured really in that orchestration, in that case management tool. And I can say approved, on to launch, right? So we're able to make that handoff effectively back to our client-facing and implementation teams.
That's great. So I'm hearing you. That's the ideal, and that's what we're going for. We're here to help. So I think what I'm hearing you say is more automation in the process. This idea of all of the information that's needed for decisioning in one place, fully integrated right there with your analyst, and then the scoring that allows you to kind of trigger the actions that need to be taken based on that score. And then finally, of course, the reporting and analytics, beautifully presented right there to you in that same application. So, and I think, Karan, I'm wondering, does that sort of resonate with what you're hearing from your customers? That same kind of end-to-end, all in one place, is that sort of what you're hearing from other customers as well?
Yeah, absolutely, right. I think that's where having an end-to-end approach is where, organizations can gain efficiency, right? So being able to do that quickly and with the right kind of due diligence is critical for them to ensure that they're onboarding the right, the right businesses, right? So absolutely, this is a common theme. What Tefil kind of laid out is definitely what we're hearing and how we've kind of built out our solution as well.
That's great. And can you talk about, since Tefil talked about risk scoring and how much that drives the actions that are taken, can you talk about some of the factors to consider in taking a risk-based approach? What do we mean by that, and what are the factors to be thinking about?
Yeah, a risk-based framework for KYB is absolutely critical because it is key to striking a healthy balance between compliance requirements and business efficiencies, right? While ensuring that the proper right amount of due diligence is taken based on the risk that is posed by the business, right, that you're trying to onboard. So absolutely, risk-based framework is absolutely critical, right? So starting off with that, right? So as Tefil said, this is key, right? A lot of organizations spit out a risk score, and it doesn't have the context and attribution behind it, right? So how do I know that what went into this, right? So being able to provide each organizations to define their parameters, define their threshold, right, is critical in terms of how we want to consider in terms of the risk aspect. Second is risk profiling, right, based on status or industry code, right, and type of PSCs. I mean, you can get pretty deep, right? So in terms of the type of insights you want to use to do risk profiling. And then the third point, which Tefil touched on as well, right, is that ongoing and continuous monitoring of the business is absolutely critical, because refreshed verification is a key element as part of compliance requirements, as well as from a risk standpoint, right? So I want to give some examples, right, that we pulled out from our data set, right? So in UK, right, so we plug in directly to the registry and other data sets. What we saw on an average, 65,000 updates are made to existing business registrations on a daily basis. 65,000, right? Just think about it, right? And then every day we're seeing about 5,000 to 10,000 new UBOs, PSCs added to business registries. So that is massive. So that's all changes, right, that you need to be able to track. So absolutely critical, a risk-based framework is used for the KYB process.
Yeah, 65,000 for one country. Amazing.
That's massive.
Yeah. Okay, so as we start to kind of wind our conversation down, I would ask the question, Bethel, how are you going to measure success? Like, what's your goal for the next year to 2 years, and how will you measure success?
Yeah. Gosh. So for my seat at the table in compliance, right? So this is my vantage point on success. I guess I worry about two things, right? And this is kind of tied back to the two objectives we started with in the KYB journey. I worry about high-risk clients. I worry that we've done enough from a KYB perspective of the entity and the KYC of the owner, right? That we really know them and that we have well-defined mitigating controls in place. So whether that's enhanced due diligence or enhanced transaction monitoring, right? I worry that we've well calibrated to that risk based on how we know and identify that client. Ultimately, my goal, right, if I'm doing my job well, is to mitigate money laundering risk, predicate money laundering risk to the organization. So that's success, right, from my vantage point. Part two of that, I certainly want to make the KYB experience friction-free and simple. So that's absolutely part and parcel to that equation. But I will say, you know, again, I am in compliance, so I anchor to the perspective of mitigating risk and making sure that we're well controlling and truly knowing our clients.
Yeah, absolutely. I wonder, we talked about this earlier, you know, in the old days, this idea of KYB was strictly compliance and legal. You know, have things changed? Who sits at the table now making these kinds of decisions?
Yeah, it's a great question. You're right. I think in general, you know, sales, product, compliance often had very different agendas in the past. We've had a lot of success at Onbi by really embedding this KYB process into the way we work, right? I talked about lead to launch. Our case management tool, our approvals are part and parcel to that onboarding of every client from lead ultimately to that launch. So it is a good balance between the desire for simplicity and speed, which is what the client-facing teams want, certainly, and the need to protect the business and create durable growth.
Yeah, it's interesting. The decision makers have changed over these years, and balancing that is the key. So
I just want to say, Tefil, hopefully, you know, using my risk-based approach here, hopefully I can, you know, get a seat at the table alongside you as an ally. So.
You're invited, Karan.
I like it. I like it. All right. So why don't we, so we can leave time for questions, why don't we wrap it up with some best practices? Thefel, I'll start with you. If you were to leave the audience with a couple of key things to think about.
Yeah. I would say focus on your process. Don't expect technology to solve something that, you know, you haven't thought through from a process perspective. Really have your process well laid out. Technology is an enablement tool. We spent a ton of time really outlining our process and making sure that it was risk-based and well calibrated to our organization. Have very clear risk-based goals for KYB. What are you trying to achieve? How do you do that? Because otherwise KYB can be a papering exercise, and that's not the intent of it. I would also say break it down into phases. It is hard. It is complex. You're going to need lots and lots of stakeholder engagement across your organization. It takes time. My recommendation would be break it down into simple, digestible component parts. That has allowed us to be flexible and agile with our deployment.
That's excellent. And from a product perspective, Kiran, can I ask you as well to leave the audience with a couple of key best practices?
Yeah, those are great points that Tefil hit, right? And all I'll add on to that is, you know, every industry, you know, presents a different use case, right? In terms of, you know, how people and businesses need to be verified. And it's unique, right, per country. So you need to be able to, from a product standpoint, right, start slow and then grow as your needs change and new solutions become available, and you have that, you know, the right set of tools in your bag to experiment, right? So that is absolutely critical, right? So as a platform, you should be able to do that, right? And a single platform, I think we talked about this, right? To do both businesses and people is absolutely critical in terms of building that, you know, that optimized verification process, end-to-end optimized verification process. And really, what's important is, as a platform, right? All of the things that Phil said, and which I kind of talked about as well, right? Have all those, levers where you can calibrate, right? And being able to adjust the workflows based on risk aspects of it or the data that's coming in, right? So that is the foundation for a robust orchestration or workflow type solution, right? So being able to create workflows in real time, tailored to meet that business needs, right? That organizations need.
That's excellent. Okay, so we'll take the last few minutes here to open it up to some of the audience questions. This first one, I think, is to you, Thefel. What tool do you use to capture all the data from your clients? Are they completing paper forms, or have you digitized the data intake process?
I've digitized it, so it's no longer paper forms. It is a web-enabled form, and it allows us to just offer better data protection and privacy. And it's also landing straight into our case management tool. So I'm not, it's not shifting hands. There's no downloading. So it just tends to give us a lot more protection. It is absolutely a web-enabled form.
Thank you. So digital is certainly where you are at this point. A second question, likely, I would say for either of you, can you talk about PII identification best practices? Tagging data elements for PII is important. And it's important as you classify the data itself. So can I ask maybe Thefel, if you start talking about, PII identification and how you're classifying that?
Mm-hmm. Yeah, so this one is a partnership. So the privacy organization reports up through me as well. We are, I would say, still in the early stages of a full data inventory exercise. Certainly we have, data classified, but then tagging that becomes absolutely essential. So I appreciate the question. I think moving to a digital footprint, getting out of paper is really the first step in that journey. We've started the initial conversations with our security and technology teams and data governance teams to lay out a framework for doing that. But I think the more that you can get digital, the more flexibility that you'll have to be able to tag these attributes, and then where those attributes are contained, in which system are they contained, so that when you get a data subject access right request, right, you know exactly where that data is housed, and you can respond to that access right based on that knowledge. Otherwise, you're shuffling through paper. So that's been my experience with that, and I'd say probably the place to start is getting digital.
Excellent, excellent. Okay, last question then is, Kiran, what are some fraud mitigation techniques that can be effective for businesses to use? Perhaps just a couple examples.
Super quick, right? So to me, fraud really starts from that initial onboarding process, right? So conducting that comprehensive due diligence as part of the onboarding process, and then being able to, doing that, some of the aspects around ongoing monitoring that I talked about, as well as, organizations should definitely look into doing transaction monitoring as well, right? Based on certain transaction patterns or behaviors that's occurring within their platform that they have visibility into, right? So you can conduct periodic reviews there, right? And the basic hygienes here, right, around OFAC sanctioning, as well as validating some of those documents, right, around articles of incorporation or shareholder, that supplemental data set that we call is being verified, right? So having a good verified source, right, and authority, using ongoing monitoring and transaction monitoring, and then onboarding process due diligence, right? Those three would be the one, right? Because it starts from the source, and then ends, throughout the journey, the fraud aspect needs to be monitored.
Excellent. All right. Well, we've certainly heard some interesting sort of themes that came through here, right? Simplification through automation, through integration of all the data sources into case management and other tools to give you this kind of end-to-end holistic look at your risk, both from verifying the businesses you do business with and the individuals within those businesses, to make sure that they're legitimately who they say they are, to make sure they're suitable to do business with. And, the desire to put together an integrated solution that will help you, protect your business, but also create the kind of experience for the user that drives onboarding, drives ongoing growth, and so on. So I appreciate both of you guys being here, and it's been a really interesting conversation. I did want to also say that, we are going to look forward to how things are developing, and Thefel, hopefully we'll be talking to you, 6 months to a year from now and hearing about your great success in putting this identity platform together. For the folks in the audience, if you have any feedback on today's webinar, or if you have any recommendations for topics you'd like to see covered on future webinars, please do complete the survey that will go out at the end. We would love to hear from you. It'll flash up on the screen now in just a moment, and then that information will be sent directly to the Finovate folks. Before we close then, let me just remind you of a couple of quick things. Some upcoming events from Trulioo. If you want to learn more, we will be hosting a webinar on the 15th, which is Thursday. And this will be with Liminal. We mentioned earlier the Liminal report that came out just in May about the rise of integrated identity platforms. If you'd like to hear from Liminal about that comprehensive report, we truly will be hosting that event on June 15th. You can use the QR code here to get the registration information. And then late in the month, we will be doing a webinar hosted by Papers in the payment space, talking about closing the loop, why KYB without KYC is only half the picture. So we are super thrilled to have had you today. Again, please stick around and fill out the survey. And a big thanks to Thefel and Karan. We hope you all have a wonderful day. Thank you.